Welcome to CashFlow Hacks. I'm your host, Chris, and with me today is my co-host, Stephanie.
Hello, hello, hello. I'm so happy to be here with everyone else who's ready to make more, save more, and start living more now.
If that is you, you are in the right place. Every week, Stephanie and I will be discussing different tips and strategies, or, we just want to keep you in the loop of different topics that your financial advisor doesn't want you to know about. And why do we do this? Because the less you know, the more they make. And we want to help you flip that script.
Exactly right. This week, we're going to be talking about a tax-free retirement plan. This is so exciting to me because there is a vast difference between pulling out $100K a year tax-free in retirement and pulling out $100K and paying taxes on it and then living off the remaining, whether it's 70, 60, 65, whatever that is, because of your taxes. It's a huge difference.
Well, I love this topic. It's one of my favorites. And I love helping small business owners set up these tax-free retirement plans, because most small business owners haven't even set up a retirement plan. And not because they don't want to. They want to, they know that they should, they're busy. And like most people, they procrastinate. And unfortunately, the future has a way of sneaking up on us. And many business owners find themselves without the financial means to do so. Is that you? I know that there's specific reasons why it's harder for small businesses to get started putting money away for retirement than it is for most other professions.
Especially because money's pretty lean in the beginning, right? Everything is retained earnings or even owner contributions, right? We're putting money back into the business. I know this as a serial entrepreneur myself. I was always taking money out of retirement accounts or emergency fund in order to grow my business. So I would take it out and put it back into my business, or I would take it out and pay for the next best, quote unquote, business coach that's going to launch my business to the next level, right? So I was always utilizing it to grow the business. And I had a lot of student loans. So that didn't really leave me extra money to be putting in. So in my mind, I had this idea that I would, it's okay because I'm just going to make a lot more money in the future and I'll make up for it. So I really didn't worry about it too much.
Well, that's good. Don't feel bad. You're not alone. I was actually the same. When I started my business, I didn't have a lot of extra money, but I didn't have the student loan debt, thank goodness. And so I know that debt is a real issue in the beginning. And I know that my statement, the next statement, might be an overgeneralization, but the vast majority of business owners have a family. For me, I don't have any kids, but for me, hearing that the mix of debt and family spells out the need for life insurance. And I know that we don't want our families to be struggling because of the debt that we've personally incurred to create our business. And we want to make sure that if anything happens to us, our family's going to be taken care of. And I have a friend, her family lived very well. Like her dad, they put him up in a really nice house. They had whatever they wanted, the car they wanted to drive. They had everything that they wanted. But one day, her father, and she was young, I think she said she was like 11 or 12, something like that. And her father had a heart attack. In their driveway, he fell down and had a heart attack. And she found out her mom found out how much debt that this father had put them in. He was making sure that he took care of them. Like he didn't want them to be without anything. And that's why they had always the nicest of everything. However, there was so much debt. And guess what? There was no life insurance. So it ended up changing their whole, they had to move out of the house. So they were living really nice. They ended up moving into a little tiny apartment where they all had to share rooms. It was something that wasn't thought of. Insurance wasn't thought of as something that was needed.
Gosh, that's awful. I can't even imagine going from where they thought that they were doing well to finding out that everything that they had was on debt. I can't even imagine how drastic of a change and a shock that was to your friend and her mom. But I know you're bringing up life insurance for a reason. So,
of course, the reason is because I know that life insurance is the perfect retirement solution. It's like a Swiss Army knife. I love to call it a Swiss Army knife because it can do so many more things than people realize. And not only could it save them from what my friend's family went through, but it also can be a great tax-free retirement solution. But before we even talk about the tax-free part, let's just go over some of the reasons why. Besides just that, I want to go over the reasons why I think it's a great solution.
But the funny thing is, like, you and I have discussed this so many times. And initially, I was totally against it. We completely disagreed because I see things in a different way. But since working together, I have learned a lot more about a different tax bracket and a different level of income and different non-traditional ways of doing things. And you and I agree on, it has to be the right thing for the right person. But we talked about that in a podcast before. But I really come to agree with you on this specific part, the tax-free retirement, and a couple of the other little reasons why life insurance is so great. So let's expand on some of the reasons so we can share it with everyone that's listening. Why do you think it's a perfect retirement solution?
Okay, so the first one, I have several reasons, is because just like I was talking about, business owners need life insurance to cover their business debt and provide for their families if they were to die. So I just don't think owning a life insurance policy should be considered an extra or an expense, but it should be standard practice of all business owners.
Yeah, absolutely right. So I have been working with business owners for years now, and I just want to throw this in. I know it's not the quote unquote tax topic, but I do want to throw this in because we're talking about it. Business owners, and especially those that are in partnerships where there's two or more owners to the business, they really need to have a life insurance policy that's called a buy-sell agreement. Because let's just imagine that you have a partnership, right? Let's say you and your partner, well, you guys have a bakery and it's 50-50, you both own it, and then your partner dies. So now all of a sudden you have to come up with the amount of money out of nowhere to buy their family out, right? Because you have to now buy that other 50% of the business. Or what could happen is they could sell it to somebody else. And then now you have this random business partner that you didn't vet because they just wanted the money for it. And sometimes it's even worse. I've had a couple of clients come in and they're like, oh my gosh, the family does want to work in the business and they have no idea what they're doing. Anyway, I'm digressing. I'm going into a whole other thing, but because you mentioned business owners and life insurance, I agree with you. It should be a standard practice, right? It's not an extra. It's not an additional. It is something that you must have. But the second reason, though, for the tax retirement, the tax-free retirement that we're talking about, is that if you're a business owner, you might want to consider starting a tax qualified plan. But a lot of business owners that when they come, especially when they're newer, when they come to me and they're talking about like, hey, I want to open up a retirement account, they don't know that the IRS actually requires them to fund an account for their employees. So in the beginning, especially, I know you may want as an employer to help fund your employee's retirement fund. At least the business owners that I work with, they're in business to build a legacy. They want their legacy to be that of them helping people, not that they're refusing to help employees plan for retirement. They want to be a positive force in the community. So sometimes I kind of have to talk them down and be like, you can't afford to do that yet, but you still need to think about you, right? I know you want to help your employees. And there are some other things that you could do to help them. But when we're talking about you and you as a business owner, life insurance is awesome because there's no requirement to do that, right?
I don't know if a lot of business owners even realize that. They want a retirement plan, but if they have employees, they have to do it for them also. And like you said, they may not have the money. So that brings me to another good reason. So let's see, we're on number 3. That would be because it's super simple and it's easy because there is no separate record keeping or reporting requirements. And as a matter of fact, Uncle Sam doesn't even know that the policy exists.
That's awesome. Reporting requirements are tedious and annoying. And like we don't have enough to do as business owners, right? So that's awesome that you don't have to have that. I like this one. I like number 4. There is no limit as to how much can be saved within the life insurance contract, except for what the contract specifies. Business income can fluctuate drastically year over year, right? So the flexibility of this can be huge because like with other retirement accounts, let's say like yourself, you can only put a certain percentage of what you make into the account. If you have a 401k, again, it's the same thing. There are limits to how much you can put away. And with this, it's whatever I want to put away. And that can be huge, especially if you're like me and earlier you pulled out of accounts and thinking like, okay, when I make more later, I'm going to put more in. And then you're just like, oh, hey, I've got all this money to put in, but you can't even put that amount in a year. So it's a great benefit. It's like, this is how much I have right now. This is what I want to put in. And there's no cap. So this really, really helpful when you're trying to fix some of the things that you did earlier on as an early entrepreneur. So you'll be able to catch up for those earlier years I mentioned before.
That really is a great reason for having the life insurance. Because like you mentioned, the qualified plans have a maximum that you can put in every year. And then if you don't reach it, it's not like you can catch it up. You just have to try again the next year. And with life insurance, like I had a client the other day, we were looking into his, and he had lots of room. He could put an extra $30,000 in his plan. And it was just because when it was sold to him, they never told him that he could put this extra amount of cash into there. They sold it to him as completely just life insurance, but without telling them about being able to borrow from it or adding to it. Yeah, they told him about borrowing. They just didn't tell him about adding to it. And so this, Steph, you're a pretty fast learner. I love it. I love it that when I am able to show you something, you learn so quickly, much faster than I did. It took me a little while to understand. I knew it was good. I just didn't understand like the small details, and you're really good at that. Another one of the reasons that we haven't touched on yet is deductions. And the reason why I mentioned that is because in the beginning, the business usually has plenty of deductions during the accumulation phase of the business, right? So the desire is to have additional tax deductions like required the qualified retirement plan. Having those is not really top of the list, like you mentioned earlier. But when we retire, oftentimes the business owner has sold the business and they find themselves in a place where they don't have a lot of tax write-offs. Now they're in desperate need of some tax advantage income in retirement. So that was number 5. I forgot to say that. I know we're running kind of short on time, and I know that we have a lot we want to say here. So Steph, why don't you tell them what the 6th reason why we think life insurance is the perfect solution?
Okay, number 6, instant liquidity to the owner's heir or estate. What I mean by that is if they only put in $150,000 and then they get out the $2 million as the death benefit, they get it right away and they get it on pennies for the dollar. It's awesome.
Pennies on the dollar. I love it. But you saying that just made me think of another reason. Number 7, liquidity. You can also use the cash value as a loan right now for business or emergency. So you put the money in and you can take it right out. And it's a great option for business. I think everything that we've mentioned today is pretty significant. I think it's the most tax advantage, low maintenance, fully liquid saving strategy that I personally have ever heard of. There's a woman that talks, she wrote a book, and one of the things she said, she's wrote several books, but one of the books I remember reading, she says, if you can tell me of anything better than this, then I will pay you $100,000. In the beginning, you said how we didn't really agree on it. But the reason why we didn't agree on it in the beginning was because some of the policies that you were actually seeing, they weren't designed properly. So they didn't actually work good for the client. So
yeah, because I had replaced so many cash value life policies because they were a ripoff to my clients. And one of the other things that I did mention before too is it depends on your tax bracket. If you're buying life insurance for life insurance, there's no way that this is for a tax-free retirement. So it's for something different. And that's something that I just kind of want to reiterate because I know you and I talk about it all the time, is that you have to listen to what we're talking about, right? Because if all you can do is afford life insurance, this isn't the right type, right? So if you're just getting it because that's what you can afford on your family, in my opinion, this may not be Chris's opinion, but my opinion, term is best, get that coverage for your family. But if you're starting to look at other things to do with it, like she said, it's a Swiss Army knife, right? When we're going just a little bit further, we're going past that basic. and we're looking at other strategies, then this is great. But that was, I think, our biggest contention is that I was just thinking of all the policies that I had read where I'm like, this is not what that agent told you. I'm reading the fine print. This is not it. This is not it. And what I loved is how you showed me that when it's built the right way, it can be amazing.
Let's talk about how it can be used as a retirement strategy. I have been showing this to my clients, and there's several ways to do this with clients depending on their personal situation, how much money their business is making. Just for this podcast, I'm going to talk about how I usually do this with my clients. I'll show them an illustration that depicts them putting money in until they're 65. That is a typical retirement age, and so that's why I like to do that. It's like comparing apples to apples, even though it's not really apples to apples, but it at least you're putting in the same amount of time. Then the distributions, we set up where the distributions start coming out, and I use the word distributions lightly. They're really loans, and the cool thing about the loans is that they're tax-free. So if you take a $100,000 loan from this policy, you can spend $100,000 in retirement. If you take $100,000 out of your traditional Roth or your SEP simple IRA, you're going to end up paying a lot of taxes. And so you take
$100,000,
right? Yeah, you take $100,000 out, and say, I'm not giving you exact numbers, but let's say you get out of that 100,000, you have 70,000 to spend because you had to pay taxes. Can you see the difference of not having to pay taxes in retirement? The only type of retirement that's out there right now that's available to us that you don't have to pay taxes on when you start taking it out is the Roth. But because the Roth is so good, the government has put rules, right? Like you cannot put in more than what? This year, I think it's $6,500 or $7,500 if you're older than 50. So this is what they call this insurance type of policy is what they call the rich man's Roth.
Yeah, I mean, that's really what gets me excited, though, because as I'm sitting and thinking about like retirement plans and like, what should I do? I want to put more now because, like I mentioned before, earlier years, I pulled out what I had or I just put everything back into my business. And now I want to put more than a Roth will let me, right? Yeah, there are other types of accounts that can be written off as business expenses and reduce my current tax liabilities, but then they grow tax deferred, which means that I'm not paying the taxes on them now. I'm paying on the taxes on them when I'm pulling out in retirement. I want to be able to fund at a high level, right? I want to be able to put more than the annual allowed amount of that $6,500. And then if you make too much money, you can't put it into a Roth. But I want to be able to pull out in retirement without taxes. So I want to put more in. I don't want to pay taxes when I pull out. And so this strategy that you're talking about, the life insurance, is the best of those two worlds, which is what got me really, really passionate about wanting to share.
Right. And that's the thing. I know a lot of people, when they think about tax-free options, they don't feel like they have a lot of options, but it's not the case. And as we talked about here, we can use life insurance to fund a tax-free retirement and do so much more. That's why I like to call it a Swiss Army knife, because it can do more than just this. You can be your own bank when it comes to this, because like I said earlier, you can start borrowing money from it almost immediately if it's designed correctly.
Right. That is something that we didn't mention. So with the like retirement accounts, you can't have access to them, whereas you can with the life insurance policy, right? So qualified retirement, you have to wait till you're 59 and a half to start pulling out. But if you did need to get a loan because you had a great, opportunity, you could do that earlier.
You're not supposed to touch your retirement money until you're at least 59 and a half. Or, and that's the thing I don't like. It's like, you're the one that saved it. You're the one that's growing it, but you're not allowed to touch it till you're 59 and a half. Or you're going to get penalized for taking your own money out 10%. And then you got to pay all those taxes that you didn't already pay. So it ends up costing you a lot to have. And I'm not saying that I'm against traditional. I just prefer this. I think this is a lot better way to go. And I think we mentioned it before in one of our podcasts, the people that have been able to take advantage of these kind of policies are like Disney World, Disneyland. Mr. Walt Disney had one of these life insurance policies, and he was able to use it as his bank. So, and also as his life insurance policy. And then JCPenney. And there's so many more. There's a whole list of people. The Rockefellers. A lot of people are using, wealthy people use this strategy. Let's just do a review, a recap of all of the great reasons why we believe that cash value life insurance is an awesome strategy. The first one is because it protects our family from we've incurred. Number 2 is if they can't afford to fund the employee's retirement account, this is a great option. Can you think of what was number 3, Steph?
It's simple and easy, right? There's no reportings. It's not difficult like the reporting for like a 401k, for example.
And you mentioned what was number 4?
There's no limit on savings, like the amount that you can put in, and that's a huge one for me. Yeah.
And number 5 was that you can catch up, and that the liquidity we mentioned, you can use it as death benefit when the person passes away with no taxes, or you can be your own bank and start using loans right now, and then there's the tax-free retirement.
Those are all like 8 great points of why these life insurance policies could be a great strategy for a tax-free retirement. Chris, I'm sorry, we're out of time now. This was a great conversation. I'm very excited for everyone who listened. You answered all of my questions, but I know we didn't answer everybody who's listening's questions. So we want to hear from you. What do you want to know more about? What do you want us to go into more detail about? Leave us a 5-star review on Apple Podcasts and ask in a review whatever your question is, or you can send our Facebook page a message and we'll be able to answer your questions.
All right. Well, this wraps up this podcast for this week. Thank you so much for tuning in. Join our Facebook group, CashFlow Hack, and follow our Facebook page, CQ Consulting Services, our YouTube channel, Instagram page, LinkedIn, and Twitter. Subscribe to us and like us. And remember, sharing is caring. So who do you know that needs this information? Hook them up. Thank you for listening, and we'll be back next week answering any questions that you might have. Thank you so much.